Okay, so this is lesson 2. This is price action, and what we're going to do is just go over today's trade, which was the 1st of April, and see if there's going to be a turnaround Tuesday on any of these pairs. Number one, okay, the day is not over yet. Okay, it's still all the yen pairs are still going down because the market is in a downtrend. It's a correction mode. So we should have a nice turnaround Tuesday before, right now it is 3:30, by 5 o'clock Eastern, maybe by 6-7 p.m. by the trade room hours, we may see the market turn around, and hopefully we'll have a turnaround Tuesday. And it's not going to give us much. Turnaround Tuesday is not going to be a lot. So we're looking at all the yen pairs, pound yen, Swiss yen, Aussie yen, Euro yen, and we're still short on USD Canadian. I'm up 1 pip on that. This eventually will go down. You see this big candle here? That's a false break. Okay? When the market it's going down, right? It's going down, and then what does it do? It shoots up and gives us what is called a false break. Did not close above the swing high. It closed inside. So this is called a false break. So you want to be shorting this. Okay. Whenever you see wicks like this, as a market, like here, the market was going up and then it gave us a false break to the bottom, and what did it do? It went up, right? Here it was going down and it gave us a false break going up, so you want to be selling. Okay, so very important. These wicks give you a lot of information. They tell you that price rejection, when the longer the wick, the more forceful the rejection, which means that the institutions don't want the market to go up past 101.80 area. Look at over here. You see, it gave us another clue back here. Look at this long bearish candle. The market has memory, and it told us again, we're not going up higher than this. This is it. It's going to turn around and go south. Okay. So when we're looking at the charts, very important, you need to be looking at least 5 or 6 days of activity, because it can tell you when you're looking at a 1 hour chart, where is the market going? Are we in an uptrend or in a downtrend? Well, right now we're in a downtrend. Okay, because it's broken the swing points. The swing points have been broken. We're in a downtrend. We have lower lows. Here's a low, here's a lower low. So we're in a downtrend. But today is Monday and we're anticipating a little bit of a retracement. And what you can do, get in the habit on a demo, is at the end of the trading day, just take a trade in the opposite direction on the demo. So on the pound yen, the New Zealand yen, I like doing this on the yen pairs because they behave a lot better than any of the other pairs for turnaround Tuesday. So what you can do is that at the end of the day, and it's not finished yet, is just place an order in the opposite direction on all these pairs, on the euro yen, on all the yen crosses. Okay, and then come back at probably tomorrow. 3 o'clock in the morning Eastern is what time for you? 11 at night? That's good. So you can trade the European session. That's great. So look at around 11 o'clock and see what's happened in the market. So, but right now you can wait because the market obviously is continuing to go down, and just wait till it finishes. And then buy it. Buy the yen crosses. And do this on every, going into Tuesday, every week. Okay? Because you have to see it, and you have to see the pips, and you have to see how much you've made, so you feel confident. Otherwise, if you don't take the trade, then you're never going to have confidence in turnaround Tuesday. You have to like blindly take the trade. And so wait till, yeah, I mean, you just have to, you have to trust Turnaround Tuesday. Turnaround Tuesday is a very good trade, but oftentimes it's not going to happen till around the European session, which is, you know, probably around 9-10 hours from now. Okay, so that's the one. I took this trade. This was turnaround Tuesday right here, and look at this trade. Went all the way up 122 pips, but it took look how many hours. 1, 2, 3, 4, 5, 6, 7, 8 hours. Finally, it took off. Okay, same thing's happening here. This was Monday. Okay, if you can get it, if you can become an expert on just Forex Friday and turnaround Tuesday, you don't have to trade any other day, and you can make a lot of money. Okay, and here's Monday again. Yeah, you'll get away from that. Okay, everybody. Yeah, everybody thinks when they first start trading, everybody thinks that way. They feel that if they're not trading, they're not making money. And the reality is, the more you trade, the more you're going to lose. Yeah, because it's a numbers game, and the more you trade, the riskier it becomes. If you only traded turnaround Tuesday, I had some students do an experiment. I says, okay, take one account and trade it like crazy. And then take another account and just trade 1 or 2 trades a week. And the one that they traded like crazy, they blew out. They completely lost all their money. And the one they only traded like maybe once or twice a week, they doubled the account. Okay, so it's the more you trade, it's difficult. Unless you really know what you're doing, then you're not going to make any money in the market, because a lot of those trades that you take are going to be losers. And are you going to have 5 losers and 3 wins? Okay, you don't want that. So, and it's why I came up with Turnaround Tuesday, because it's a sure thing. You know, Turnaround Tuesday does work. Okay, you just have to qualify it. So here's Monday. Here's the reaction. Here's Monday again. And it should go up. Should give us at least 30 or 40 pips. Let's see if it does. The same. Mm-hmm. No, by the end of the day, I just get in, because it's a phenomenon that whatever direction it takes on Monday usually goes the opposite direction on Tuesday. That's all it is. But I just wait till the end of the day, and the end of the day isn't finished yet until it hits this perforated line here. Okay, and when it's finished, I mean, you can take the trade anywhere around here, anywhere, and just wait till you're in profit and get out. I mean, and I like to do it on all the yen pairs, not just one. I like to enter trades on all of them, because if I only make 20 pips off of each one, you know, that's 100 pips. Okay, instead of staying in trying to get 50 or 100 pips, try to get 10 or 20 pips on each one. Okay, and you essentially make 100 pips, 80 or 100 pips in a short amount of time. Okay. All right, so that's the Turnaround Tuesday. That's really important. I mean, here's the movement on Monday. Here's Monday's movement, and then Tuesday it should go back up to these levels. So about 74 pips on the USD yen. Should go up to these levels up here. Okay. And but we know we're in a downtrend. So what will happen most likely is it will retrace, find a resistance level, like on this pair, it should be around here, and then it should go back down again, because we're in a downtrend. All right, just like any trend, here we're in a downtrend. See, the market sold off, then it retraced, then it sold off and it retraced, and sold off, retraced, and then it sold off again. Okay, so you always look at the markets that way. You know that you don't want to be taking a trade short here, because it's already put its daily range in. Okay, no one wants to be selling down here. It went 130 pips already. So what traders will do is wait for the market to go back up so they can sell it. Okay, and so just remember, that's how you have to look at the markets all the time. Look at this 24-hour session. What did it do? Well, it was sold off. Okay, great. We're in a downtrend, but I need for this to retrace so I can sell it. And that's where the Fibonacci levels come in. So let's just assume that this is the low for the day. It's not going to go any lower. So you draw Fibonacci from the top to the bottom. And then these are the levels of resistance. And interesting enough, 61%, which is the most popular, is right at the swing point. And this is a support that is now resistance. So if it goes back up to 93.90 area, that would be a great place to sell. Okay, because you have confluence of indicators. You have 61%. It also happens to be a swing point. Very important. Okay. Now notice the stochastics is oversold on both the 21 and 14 right now. Okay. So I'm going to draw a trend line on the wave, and if it breaks and it goes back up, it should continue to go up to these levels. But right now we're still in a downtrend on all the yen pairs, but they're going to find support, and eventually this should turn around and go back up and retrace, and it will probably not happen till late Asian and European session. Okay. So that's the turnaround Tuesday. That's that phenomenon that happens from Monday to Tuesday. Okay, so just remember that, because this is so important, because you can, I mean, this turnaround Tuesday, and I'll put it up here for you. Turnaround Tuesday. You know, it's not something I made up. It's well known in the industry that the markets tend to turn around on Tuesday when the market goes down on Monday. Okay, and here was a good example. This is Monday on the pound yen. It went down 300 pips and then gave back 194. Okay, so it should do that again. And we just have to wait till the market settles and then turns around and goes north again. And oftentimes what I'll do is wait for a color change candle. So this may go down to 141.64, let's say, and then all of a sudden it'll turn green and start going north, and then that's the time to buy. And you can start buying it. Okay, so you can, yeah, then you want to sell. Right. Okay, like for example, USD Swiss. No, USD, Euro USD. Here's Euro USD. Today it went up. Okay. Put in 100 pips, and we're looking to sell now, coming into Tuesday. Okay. So markets will always retrace. You know, sometimes they'll retrace a lot. Sometimes they'll just retrace a little, like this one here. Huge sell-off. See this one here? Huge sell-off. But the retracement wasn't that much. Just gave us about 50 pips. But it was still a retracement. Okay. And then it sold off again, but then look at the retracement here. Turned around and went north. Here, it went north, and we're waiting for the market to come back down. So you can sell it up here and try to capture 20 or 30 pips. Okay, so always, the turnaround Tuesday is a good trade to take, and it should really pay attention, especially when the markets really sold off, like here, like on yen, euro yen. Look at this huge move down, 300 pips. Then you know you're going to make money on the retracement on turnaround Tuesday. Okay, these are the ones and don't worry, when we I'll show you how to do this, but what will happen is that I'll send out the signal, look, we've got a great turnaround Tuesday, take the trade, You know how to trade turnaround Tuesday because we've gone over it, and it just gives me more confidence. Okay, this is good, turnaround Tuesday, because you're going to be seeing it every week. You're going to be alert to it. You're going to be anticipating the move because every day for this 4 weeks, 4 Tuesdays out of the month, and you'll be able to trade each Tuesday and make money on it on each one of those. Okay, and I normally just like using the yen crosses because they're consistent. The other pairs are not so consistent. Okay, so let's see. We have were you able to take any more screenshots? And when you're taking the screenshots, a couple of things. Go ahead. Oh, okay. So you got an MT4 platform, right? Okay. So what you can do is this. You don't have to take a screenshot of each individual. What you can do is look at like 5 days of activity, like here, and just find trades like here. You know, here's the setup right here. Here's the Cassick's oversold. Here's a color change candle. There's a trade, right? And then here's another one here, right there. Color change candles. The Cassick's overbought. So you can do this. You don't want to be taking just one screenshot of each one and sending it. Do multiple. Just make sure you're looking at about 2 weeks of activity and just recognize what these are. This is a color change candle right there, and it's the Cassick's oversold on the 21 and 14. So that's a trade. Okay? And here we have a color change candle and market's overbought on 21 and 14. There's a trade right there to go south. And then here we have a color change candle and it's the Cassick's oversold. So I have 1, 2, 3, 4, 5, 6. The 6 trades here already. Here's the 7th one over here. So on one screen you could have 7 different trade setups. It's a lot easier that way instead of trying to do one at a time. That will take too long. It's time consuming. So just look at 2 weeks of activity and then go to another chart and do the same thing. You've got here, we've got 1, 2, 3, 4, 5, 6, 7, 8 days. Then go to the pound yen and do the same thing. Look at 5 days of activity or 8 days and see and try to understand these moves. Why did the market move so much here? Well, we were in a downtrend and the Cassick's was overbought on 21 and 14. We had a color change candle, so it sold off. But then it hit the previous support and the Cassick's overbought, so you would buy. Okay, so start to understand and start seeing these patterns that the markets, they sell off and they hit a support level, then they go up, and then they hit a resistance level, and they go down, hit a support level, go up. Okay, here we have a support level as the Cassick's oversold. Okay, so you're going to start to train your eyes to be able to see these. Look, this is all support, and it's turnaround Tuesday, so this would be a great place to buy because this is a support level. Yeah. Yeah, you can't be just focused on that area. That's a mistake. You need a lot of data to make a decision. You cannot be focused on this one area because you're going to make a mistake. You have to be looking what's happening back here. Well, this was a support level. Okay, and this is a support level. This is a support level, and it's turnaround Tuesday, so this is a great place to buy. Let's go to the euro yen. Same thing. Let's stand back. You've got to like stand back. Let me get rid of all these lines first. Look back. If you're just looking at what's happening right now, you're going to make a lot of mistakes because what's happening right now is not telling you anything. You need all this information. You need what's been going on for the past 2 weeks. Okay? And this is what I do. I highlight the support level and I see stochastics oversold, and I know tomorrow's turnaround Tuesday, so I would buy it here. Okay? I'm buying it at support and you selling it at resistance. Here's resistance. Here's resistance levels up here. So you're selling at resistance and you're buying at support. That's all. Don't just look at this because you're really going to get confused. You have to be looking what happened 2 weeks ago. Why is this level of support so important? Let's go to the 4-hour chart. Look at this here. Okay. Look at this. Remember this level here? Look at this. Look at all this area. Okay. All this 119 area is a very strong support, and stochastics oversold on the 4-hour chart. So this would be a great place to buy. But unless you're looking at activity from all the way back, you're going to make a mistake. Here, look it up here. Level of resistance, right? It went all the way back to here. Look at the resistance back there. You see? And then it came up there, but if you were just looking at this area, then you would have a really hard time figuring out what to do, because you're focused on one area when you should be looking at the whole area. Okay, you got to be looking at everything. And then you say, okay, I'm going to sell here because I have a color change candle, and I mean here, and stochastics overbought. So you've got at least, and it's hitting a previous resistance. So now you have 3 reasons why you should sell. If you don't have 3 reasons to sell, then don't even take the trade. All right. Here, I've got 3 reasons. I've got a previous support level, stochastics oversold on 21 and 14, and I have a color change candle. So this would be a great place to buy it. Remember, you're not interested in staying in a trade for a long time. What you're doing is you're taking advantage of the support and resistance levels. Okay, and placing trades there. Okay, now if it breaks below this, then that's okay. Then we were wrong in the trade, and it will print lower. But the thing is, you have to place trades at support and resistance, because that's where the market is making a decision. There are decisions being made by the bears and the bulls right here. A decision is being made. Should we break this level or should we retreat? So the bulls try to push the price up and the bears push it down, and then the bulls get out of the way and the market goes down. So the same thing is happening now, where the bulls are trying to push price up and they're struggling. There's no one is in control of the market, and that's why I always say, if a price goes up 8 pips above the color change candle, then that means the bulls are starting to be in control, and then the price will go up. Okay? So that's all you really need to do. So what I want you to do when you start practicing and doing your homework is start finding, go on the 1-hour chart, on the 4-hour chart actually, and start looking for these levels of resistance and support, because these are the key that will, the market will tell you. And here a resistance is broken, like here. Here was a resistance, but you didn't have a color change candle here to sell it yet. You didn't have any. You did have stochastics overbought, but you didn't have really a candlestick pattern, and it just blew past there. So this support, this resistance now becomes support. It's not a resistance anymore. Okay, so this was a difficult trade because there was, you would think that it would turn around going south because the stochastics overbought, but it didn't. It was a breakout trade, and you would buy it as soon as the candle broke above the swing point. Okay, you get used to this. You'll be looking at a chart and you're seeing, okay, why did the market stop here? Well, if you look, remember the resistance turned support? Look, here was resistance and it was broken, so this resistance becomes support, and it happened like a month later. There it is, right there. Right, it just went back to it. Look, see? So now it's happening again. Okay, that area of support is happening again. And stochastic silver sold. So this would be a great place to buy because it's tomorrow's Tuesday and it should go up. Okay. All right. So practice looking at 4 hour. Here again, this is the pound yen. We have 1, 2, 3, 4, 5 areas of support for the past since the March 25th, and then again back from, you know, beginning of March. So this whole area is a good place to buy, because if it breaks below here, then you get out and you take about a 30 pips loss, and that's okay. But these are levels of high probability trades. These are areas that most likely the price is going to bounce off, like it did here, like it did here, like it did here, like it did, and it did it this morning. It bounced off this morning. See that? It went up, you know, like 82 pips. Wow. Okay, so now it's doing it again. Okay, and yeah, it's okay. It's you'll turn this around. It's just, you're going to find that the fear is going to subside. I lost over $100,000 in trading forex, and I don't care, because I know as soon as I start feeling fearful, what it does, it just attracts more losses. Yeah, you just lose more because you're attracting it. It's a self-fulfilling prophecy. You feel, because you think you're going to lose, guess what? You're going to lose. So I learned, I lost all my money, and I thought, well, you know, I could only go up from here. So I think I'll take this trade, and if I have a loss, no problem. I'll always take this trade because it's at a support level. And it's turnaround Tuesday, and you just put a stop loss and you leave it alone and forget it, because that's how professional traders trade. They know they're going to have losses, but everything is about probability, not possibility. Probability. It's probably going to go up. Okay, so, and it's starting to right now. So I've got buy orders on all of these right now. I've got a buy order on the pound yen. I have a buy order on New Zealand yen. I have a buy order on Swiss yen. I have a buy order on Aussie yen, and a buy order on Euro yen and USD yen. Yeah, 20 pips below the swing low. That's it. Okay. It's that simple. You got to keep this as simple as you can. The only reason you're afraid is because you took a trade without really qualifying it before. Okay, that's all it is. You either chase the market if... No, yeah. Right, you got to put it all together. You've got to realize that this is a 24-hour session, and for that 24-hour session, it's going to keep going down. And the only time you had a chance for this to turn around and go north is at 12 noon, which is right here. So you got to remember, at 12 noon, if you were short, you have to get out. Right there was noon Eastern. That's the London close. London close is right here, and that's why it turned around and went north. So just remember every day when you trade, and you have to look at the clock. What time is it? can this thing go? I mean, this was a good trade. It went up, and we had a color change candle right here, and it went down, and that was a nice trade right there. Okay, sold off, retraced, turned around and went south. That was about 50 pips. But you needed to get up, needed to trade up here at the color change candle. Okay, look at the color change candle. We know we're in a downtrend, but this is where you needed to get in, not down here. Okay, you needed to get in here when the, this is why, you know, trading is so technical, and you got to get away from thinking what you think the market's going to do. You got to look at what is the market doing. Okay, what, right, you were talking about this one here. You were saying this was a reversal. Okay, and the problem is that the day wasn't over yet. Okay, this was just the beginning of the day. This is a 24-hour session, and the market, you first have to see how many pips did it go down. Only went 50 pips, and you were looking to go the opposite direction. When a currency, the pound, you were looking at the euro yen. Let's look at the euro because it was the same thing. It was a mirror. The thing is, on the euro yen, here you were ready to buy it when the market, let's see, had already put in, is that the, oh, that's a 4-hour chart. Okay. Here it is, right there. The market only went down 70 pips, 77 pips, and you were ready to buy, and it wasn't even the New York session yet. Okay. So, okay, so you can't do that because the Singapore session, it took a direction, and it was going to go through the European session, and then if you want a retracement, you have to wait till noon. Not all the time. What you got to do is that you have. That's why you have to trade technically. This is Tokyo, and then this is Singapore, right? And then this was it went up a little bit and then went down during European session, and then it was over. Okay, and then it started to retrace. So you have to remember, that's why I teach everyone, look at the time of the day when you trade and think, is this move over? That's why I tell everybody, take a counter trend trade at noon, because the market, the London session is closed and this whole move is over, going down. Here's the pound yen, was a good one. You see how it's starting to go up? Okay, this move is over, and this is noon right here. This was noon. This is the London close, and it was noon Eastern. This move is finally over. So you've got to, if you're going to place a trade, if you were going to sell, then you had to do it before noon. All right, you couldn't do it after noon or close to noon, because the market was just going to turn around and go the other way. Period. Okay. So just remember that, because the thing is such an easy thing, and you can make so much money if you know exactly what to do at the right time. And I've been doing this for so long that I know that at noon, if I haven't sold it, I can't sell it anymore, because it's getting close to the London close, and all the traders that took a trade up here going south, they're exiting their positions at the London close. So that's why the market starts going up. Okay? So just remember that. You have this recording, and I mean, we'll stop right there, because that's enough to know that, and you can do this actually not only Tuesday, you can do it any day. You have to remember that at noon, if you were short, like here, look, market sold off, right? And look what happened at noon. Turned around and went north. Here's the close of the London session, and the market retraced. Okay? It's crazy. Okay? It is so crazy that can happen. You don't have to lose money in Forex anymore. All you have to know is when to trade, when to take that trade. Okay? And to me, Turnaround Tuesday works all the time. I just take the trades at the end of the day. I just get in because I know it's going to go back up. Okay? So, and then we have USD Canadian pair. Look, starting to go down. Okay? Why? Because of this false break. Okay? Very important. Understand these false breaks are so important. Okay? This is a false break. See how the market, we're in a downtrend here. Okay? I draw a line because we have lower lows. And look at this candle here. It throws us a wick. That's a false break. It was going down, retraced, started going down, then tried to go up, and gave us a wick. So that's a sign telling you to go short. Okay, so anytime you see that, okay, you go back in history, look, the market went up, right? And it found resistance, and what did it do? It kept on giving us these wicks. Look at these wicks. There's so many wicks. Finally turned around and went south. Here, the market sold off, right? And what did it do? It gave us a wick. Turned around and went north. And this candle was bigger than the previous candle, so this was valid. And turned around. You just need to practice this every day, and you're going to see how easy this is going to be. It's going to be so easy because you'll know, first of all, when to place a trade. If you were, let's say, if you were looking at the yen pairs and you wanted to sell, great, but make sure you're out of that trade before noon. You know that now. Okay, you know you need to get out. If you were short, and you cannot short when it goes down, you have to short when it goes up. Never short it when it's going down. Always short it when it goes back up. Okay, very important. It's counterintuitive. But most traders do the opposite. They see this and they want to short. Right, it's the worst thing you can do. It's a terrible thing to do because it's going to hit a support and turn around and go north. And then that's when you short it, when it goes back up. Never when it shoots down. Okay. So now it's finding support, and tomorrow's Tuesday, so it should go up. Okay? So just remember, it is counterintuitive, but you have to get used to that. And you'll find you'll make money hand over fist if you know how to do this every day. I mean, I know traders, they make 100% a month. Okay, I know a guy who's trading a multi-million-dollar account. He makes $1 million a month on his client's account because he knows how to do this. Okay, and he's crazy. He over leverages, and he does like 20-30% of the account. But the thing is, he knows what he's doing. He's not afraid because he's been doing it for years, and he knows Turnaround Tuesday. He knows when the market, he knows what to do at noon every day. Okay, it's very simple. It's just that the market, next time, the only reason you're afraid is because you don't know these things. You have to have a lot of knowledge. You have to have understanding of the intraday activity of a pair. And once you understand it, the dynamics, what happens, the market goes in one direction, but at noon, it retraces. Okay? And if you know that, then you can take a trade and make money every day. Okay? And it becomes a lot of fun because this is the same thing that happens on a daily basis. Okay? Well, it's intense because you don't know. You don't know. You don't understand what's going on, and that is crazy to trade if you don't understand what's going on. And then you end up losing money, and then you start making the same mistakes because you're trying to say, get that money back, and then you make more mistakes. And that's not trading, that's gambling. Okay, this is trading, knowing when the market's going to turn around. Okay, knowing that, all right, the market sold off, retraces at noon. This is turnaround Tuesday. Did the same thing the same day, the next day. It went down, found support after a sell-off. The good thing to do is count the number of pips. How much did it go down? 170 pips. Okay, I should be able to at least get 50 pips on the way up. And it went up 97 pips. Here's this trade right now. You need to do this. You need to calculate how many pips. It went down 156 pips. I should be able to get 50 pips on the way up. Okay, on this trade. Okay, very important. You need to know how many pips did the market put in for that session, because that determines right. Well, if it's over, it's fine. Then wait till noon and buy it so you can take a trade. Right. Right. No, it's not. It's 24-hour session, and the market, you know, I mean, it started here, and it was going to, just remember, if the market takes off in the direction, it usually will continue to do that till about 11, 12 noon. Okay? So let's stop right there.